So let's go to our own Ali Canal, who has been standing by, and particularly here, Ali, there's so much to continue to break down with Disney. First and foremost, let's talk about what we're seeing and hearing from a lot of those activist campaigns as well that have initiated and where things are set to move forward from here.
Yeah, it certainly hasn't been an easy road for CEO Bob Iger since he stepped back into the position nearly 1 year ago. He did briefly speak about the activist fight in an interview with CNBC following the earnings announcement. He said he's had a call with Nelson Peltz, but ultimately he doesn't know what exactly the activist investor wants. But he did address the falling stock price. You mentioned the stock is at 9-year lows. Shares are currently down about 3% year to date. They've fallen nearly 8% since Iger has taken over as CEO. The executive said, quote, we don't manage the stock price for short-term gains or on a short-term basis. We have a long-term view, and this past year has been spent fixing things that needed to be addressed. The long-term picture for Disney shareholders is quite bright. And these were sentiments that were echoed at our Yahoo Finance Invest conference on Tuesday. Like Shauna said, I had the chance to speak with Kevin Mayer. He's the former head of streaming for Disney. He currently serves as co-CEO of his company, Candle Media, as well as serving as an advisor to Iger. I asked him specifically how one can manage a company when the stock is struggling, when you're fending off all of these activist fights. How do you make long-term decisions when you're dealing with all of these short-term problems? Here's a bit more of what he had to say.
Bob has his hands full. I gotta say, you take someone like Bob. He's very capable. He's multifaceted. He can. You know, he has a lot of range, so he can handle it. Not everyone could handle a situation like that. But I think you have to be disciplined. And Bob's always been very strategic. So when we did M&A, we were very much about, let's look at the strategy, let's look at the context, look at where we want this company to be, and then look at what assets can plug in there to get us there.
And that's a strategy Iger is certainly focused on right now. In the earnings release, he said there are 4 pillars the company is really emphasizing moving forward. One is streaming profitability, which you guys mentioned they are on track to hit at the end of fiscal 2024. Another is ESPN's transition to direct-to-consumer, along with growth in the parks business and more output on the film studio side. You said earlier that Disney has already upped that cost-cutting goal by $2 billion to $7.5 billion. Free cash flow is expected to hit $8 billion in fiscal 2024. Disney Plus added a whopping 7 million subscribers in the quarter. So all in all, this was very strong, and I'm guessing Nelson Peltz is going to be encouraged by the results that we saw yesterday.
Ali, I'm curious to get your take on the ending here of the actor strike, just how much of an impact that has had at Disney, and now potentially here with this resolved, what that could do for Disney's business in the current quarters, or in the coming quarters, excuse me.
No, it's huge really for all of the studios, and there's been pressure on both sides. I mean, this strike has lasted 118 days. We finally have a deal, and judging from the commentary that we've gotten so far from the union, it seems like the union was able to get a lot of their requests, especially when it comes to protections surrounding AI. We know that there is some sort of streaming compensation included in that. We won't see the specifics of this deal until it goes to the board on Friday, but it comes at a critical time. I mean, especially if you think about this all going to plan, we still have a chance to save the broadcast season. We still have a chance to save the 2024 summer box office season. And that, I think, was the critical part for Disney, really for all of these studios. Once you start shifting around the theatrical release schedule, that's going to create some headwinds. But we also have to remember that there's also been a lot of pain on this side. Both of those strikes, the writers included, estimated to have cost the LA economy more than $6.5 billion and 45,000 jobs in the entertainment industry. So there's been a lot of pain, but hopefully now Hollywood can get back to work. And Disney, along with many others in Hollywood, is very happy about that.
Certainly. All right, Ali Canal, great stuff. Thanks so much for breaking all of that down.